Welcome to the deep dive. This is where we take your sources, could be articles, research, even your own notes, and really cut through the
Right,
noise.
to get to those key nuggets of knowledge and insight.
Exactly. We want to give you that shortcut to being genuinely well informed, maybe with a few surprising facts, maybe a little humor, keep things interesting.
Keeps us interested, too.
True. So today we're diving into Atomera Inc. That's NASDAQ ticker ATOM. They're a semiconductor company, and they're just about heading into their Q2 2025 earnings report.
Okay.
Now, the sources you shared make Atomera, well, particularly compelling, I think. You've got a stock that's down, 59.2% year to date? That's quite a drop.
Yeah, that's bruising.
And it carries heavy short interest. We'll get into what that means. Crucially, it's still pre-revenue, basically not making significant sales yet.
Right. Still in that development phase, essentially.
But despite all that, it boasts what people are calling a breakthrough licensing pipeline. So our mission, really, for this deep dive is to figure out if this upcoming Q2 report, could this be the moment?
The moment when all that groundwork, years of it, finally starts turning into actual commercial traction.
That's the question.
And, digging into a company like Atomera, which is right at this kind of potential pivot point, it's really valuable for you, the listener.
How so?
Well, whether you're just trying to get up to speed on the semiconductor world, which is complex, let's be honest,
Oh.
or you're just fascinated by how these high-stakes tech companies make that jump, from idea to actual product sales. This is all about that balance, right?
Yeah.
The potential versus the execution.
Okay, good framing. So let's ground ourselves first. Atomera's current situation, we said pre-revenue. What else?
Well, the basics. As of July 25, 2025, the ticker's ATOM, price was around $5.28.
And that 59.2% year-to-date drop we mentioned, that's the context.
Exactly. And being pre-revenue, but still having investors interested.
Ah.
That's kind of the fascinating part, isn't it?
It is. What's driving that interest then, if not sales?
It all comes down to their intellectual property, their IP.
Yeah.
Specifically something called MST, Mirror's Silicon Technology.
Right.
They're licensing this tech. They aren't selling the chips themselves. They're selling like the secret sauce inside the chips that supposedly makes them better, faster, more efficient, that kind of thing.
Okay, so they're selling the recipe, not the cake.
That's a good way to put it. Yeah.
Got it. So if everything hinges on that IP recipe, the big question is, how long can they keep going without, significant cake sales?
Yeah.
Let's unpack the financials.
Yes, to do that. So for Q2 2025, the guidance they gave is for revenue between, $0 and $50,000.
Zero. Okay, so potentially nothing.
Potentially nothing. And the consensus earnings per share is a loss of 0.14 cents.
Still in the red. Is that better or worse than before?
It'd be a slight improvement over Q1. They missed expectations then with a loss of 17 cents when analysts expected 14 cents. So maybe stabilizing a bit on the cost side.
Maybe, but still losing money. What about their cash pile? How long can they keep the lights on?
Oh, okay. That's the crucial part for a company like this. End of Q1 2025, they had $24.1 million in cash.
24 million. And how far does that stretch?
At their current burn rate, the estimates are around 5 to 6 more quarters.
So a year and a half, maybe?
Roughly, yeah. It's a buffer. It buys them time, critical time for that commercial progress, for those licenses to actually start generating royalties.
It's not panic stations yet, but the clock is ticking.
Exactly. It's not rent is due next week, like you said, but it's certainly not build a moon colony money either. It focuses the mind.
Okay, so they have some breathing room, thanks to that cash. Let's pivot now to that long-term potential, the value proposition. It's all about monetizing MST, right? Through licensing.
Correct.
The engagement figures sound impressive. What were they, 26 active engagements?
Yep, 26 engagements across 21 different customers. And notably, that includes 10 of the top 20 global semiconductor manufacturers.
10 of the top 20, that sounds significant. In this industry, how big a deal is that? And what does it really mean for potential revenue?
Those numbers are definitely significant. Getting the attention of the big players in semiconductors where, design cycles take forever.
Right.
It tells you the technology, MST, it's passed some initial technical checks. It's being seriously looked at.
I sense a but coming.
Well, yeah, the big but is.
Yeah.
Why has it been so slow? Why hasn't that engagement turned into actual revenue faster? That's what everyone's asking.
What's the answer? Or the theory?
I think part of it is just the nature of the beast. Semiconductor giants integrate new foundational tech like this very, very cautiously. Think about the cost, the risk of changing a massive production line.
Billions of dollars on the line.
Exactly. So they're incredibly conservative. The prime example everyone points to is their Phase 4 license with STMicroelectronics. ST is their most advanced partner.
Phase 4 sounds pretty far along.
It does. But it's still stuck in the qualification phase. That means no volume production yet, and crucially, no royalty revenues coming in from it.
So it's like they found gold, but the road to the mine is still being built.
That's a perfect analogy. You know the gold's there, the potential value's there, but you just can't get it out and sell it yet.
Okay, so ST Micro is key, but stalled. Are there other irons in the fire? Other partnerships that might, grease the wheels? I saw something about a new alliance in 2025.
Ah, yes. The alliance with an unnamed leading chip fabrication equipment partner.
Right. The goal, as stated, is to perfect the implementation of MST on advanced equipment and speed up adoption through co-selling. Sounds like a smart move.
It does sound smart. Partnering with the equipment guys can definitely smooth out integration, make it easier for chip makers to actually use the tech.
But is it the game changer, it sounds like, or are there catches?
Well, the big caveat, straight from the sources, is that this alliance is still early stage. It's not commercially material yet.
Meaning no immediate impact on the bottom line.
Exactly. The near-term revenue impact is uncertain. And this really ties back to that bigger challenge, converting that impressive pipeline, those 26 engagements, into actual signed deals and royalties.
And management knows this is slow.
Oh, they've acknowledged it. Talked about delays and prolonged negotiations. And this idea of some huge transformative deal with a major manufacturer landing soon, that remains, quote, speculative and unconfirmed.
So hopeful signs, but still speculative.
It's a step forward, definitely.
Yeah.
But it's not like they're sprinting to the finish line just yet. More like a determined jog.
Okay, let's shift gears a bit. Move from inside the company to how the market sees it. We mentioned high short interest earlier. Can you break that down?
Sure. As of the end of June 2025, there were about 5.36 million shares sold short.
Which is what percentage of the available shares?
It represents about 20% of the float the shares actually available for public trading. That's a pretty chunky number.
20%. And the days to cover, you mentioned that too.
Right, around 11 days. That basically suggests, based on recent trading volume, it would take short sellers about 11 days to buy back all those shares if they decided to close their positions.
And it's worth noting, this isn't rumor, right? It's verified data from places like MarketBeat and Fintel.
Correct. Verified figures.
So what does that 20% short interest tell us?
Well, it clearly shows there's significant skepticism out there. A meaningful chunk of the market is betting the price will go down further. It reflects that sustained bearish positioning.
But there's a flip side to high short interest, isn't there?
Absolutely. It sets up the potential for a short covering rally or a short squeeze.
Explain that.
If Atomera does announce good news, maybe a surprise licensing deal or better than expected earnings, anything positive really, the stock could jump.
And the short sellers?
They might scramble to buy back shares to cut their losses, which pushes the price up even faster. It creates this potential for rapid upward movement, so it adds volatility, high stakes for both the bulls and the bears.
Okay, so a lot of tension built into the stock price there. What about the technical picture, the charts, any signals?
Yeah, there are some interesting developments. The stock seemed to have found a bottom around $4.50 recently.
And bounced off that.
Right, bounced up to around $5.28 where it was trading recently. And significantly, it's back above its 50-day moving average.
Which is a level traders watch.
Yeah, it's a common indicator. Being above it often suggests some positive near-term momentum. Plus, another tool, the Man-CD, which tracks momentum trends, just turned positive. And trading volume has been picking up.
So some green shoots on the chart.
Some potentially encouraging signals, yes. But, and this is important, technical signals are more directional. They aren't crystal balls. They're not predictive.
Right. So what's the caveat here?
While there's some upward momentum suggesting maybe growing interest ahead of earnings, the longer-term trend is still down. The stock really needs to break through some key resistance levels overhead.
Resistance levels, meaning?
Prices where it's stalled out before. Think of them as ceilings. There's likely resistance around $6 and then again around $7. Until it can convincingly break through those, you'd say the downtrend is still technically intact, even with this recent bounce.
So promising signs, but it needs to prove it can climb higher.
Precisely. It's a start, maybe, but not a confirmed reversal yet.
Okay, we've talked about the bears, the short sellers. What about the insiders? The people running the company and the big institutions? What's their take?
Well, insiders, like management and board members, they still hold about 13% of the company.
13%. That seems fairly high.
It is reasonably high, yeah.
Yeah.
And importantly, there hasn't been any significant insider selling reported recently.
Which
Usually suggests they still have confidence in the long-term prospects. They're holding on to their shares. Sustained internal confidence, you could call it.
okay, so insiders seem confident. What about big money? Institutional investors, Wall Street analysts.
That's where the picture's a bit different. The institutional coverage is actually quite sparse.
Really? Not many big funds involved.
Relatively few compared to many tech stocks. And that $7 price target that sometimes gets mentioned?
Yeah, I've seen that.
Well, the sources point out that really only comes from one or maybe two analyst reports.
Just one or two.
Yeah. So it's not like there's a broad Wall Street consensus backing that number. It limits how robust that target really is. Fewer big institutions are actively covering it or buying in large quantities right now.
Interesting contrast. Insider confidence, but limited institutional buy-in.
Right. It adds to the overall picture of a company still needing to prove itself to the wider market.
Okay, let's try and pull all these threads together. What does this all mean for you, the listener, trying to get a handle on Atomera?
I think the first thing to hammer home is
Yeah.
this is not a revenue growth story right now. Not yet.
Right, still pre-revenue, essentially.
It's purely a technology validation and, crucially, a licensing play. The whole investment case hinges on them successfully signing those deals for their MST tech.
And each deal could potentially unlock.
Recurring revenue. Royalties. That's the long-term upside everyone's hoping for. And you can see the groundwork, right? Those deep engagements we talked about.
The 26 engagements, 10 of the top 20.
Exactly. Those meaningful partnerships, like the new one with the equipment maker, even if it's early. And they're talking about promising new applications for MST, too.
Whereabouts?
Areas like GaN, that's gallium nitride, important for high-power stuff, electric vehicles, chargers. Also RF, radio frequency, for better wireless communication, 5G, 6G, and just general power electronics efficiency.
So the tech itself seems versatile.
It does seem to have broad potential applications. But again, potential isn't profit.
So summing it up, this Q2 moment, it's not make or break necessarily, but it feels significant.
I'd call it a potential pivot point rather than a definitive breakout moment. Not yet, anyway.
Okay, a pivot point. What would constitute a pivot?
Well, if Q2 shows maybe better cost control, holds the line on the cash burn, but more importantly, if there are any concrete hints of progress on the licensing front.
Like movement on that STMicro deal or another deal moving into a later phase.
Exactly. Any signal that those engagements are turning into tangible commercial steps. If that happens, the stock could definitely rally, especially with that high short interest.
And if not, if it's more of the same.
Then the waiting game continues. The market will likely want more proof. What's really fascinating here is that tension, that dance between the technology, which seems innovative and validated to some extent.
And the commercialization process, which is just proving really slow and difficult in this industry.
Precisely. The pieces look like they're there, but that commercial engine just hasn't fully kicked into gear yet.
So that really highlights the core dilemma for anyone looking at this, doesn't it?
Absolutely. The current stock price, down almost 60% year to date, clearly reflects market disappointment and impatience.
But the long-term vision, the promise of the technology, that hasn't necessarily gone away.
No, the vision seems intact, but, and it's a critical point, as of right now, there is just no guarantee of a near-term revenue breakthrough. That uncertainty is key.
So manage expectations accordingly.
Definitely.
Stepping back then, thinking about the bigger picture, what's the key takeaway from analyzing a company like Atomera?
I think it highlights how, for deep tech companies, knowledge about the tech itself is only valuable when you can clearly see its path to application, its path to market.
The so what factor.
Exactly. Atomera has the pieces, arguably.
Right.
A unique IP model, interest from major players, technical validation seems okay.
Yeah.
But connecting those pieces into a revenue-generating machine is the challenge.
Okay, so bringing it back to the listener, we've got this situation. Verified high short interest, creating potential volatility. Some improving technical signals on the chart, maybe suggesting a bottom. And this constant possibility of a licensing catalyst.
Could be Q2, could be later.
Right. So Q2 really could set the tone for the second half of the year, maybe a rebound, maybe more waiting.
It puts a spotlight on the earnings call, for
Yeah.
sure. Any commentary on licensing progress will be heavily scrutinized.
Which raises a really interesting question for you, the listener, to think about. How do you weigh these things? Tangible financial performance right now or lack thereof?
Versus the promise, the potential of future technological breakthroughs when you're assessing a company like this?
It's a classic tech investing dilemma.
It really is. There's no easy answer.
So as you continue your own deep dives, maybe mull that over. Looking at Atomera's complex, high potential, but also high risk scenario,
Mm.
what stands out most to you? What piece of this puzzle do you find most compelling or perhaps most concerning?
Yeah. What's your take? It's a fascinating case study.